Hello, everybody, and welcome to Commodity Culture, where our goal is to make you a better investor in the commodities space. My name is Jesse Day, and before we dive in, standard disclaimer: nothing here is investment advice. Do your own due diligence. And today's guest is the host of the Mineko64 YouTube channel, home of alternative economics and contrarian views. Today, we're going to be discussing a hot topic, which is the manipulation of the gold and silver markets. I get a lot of comments on my YouTube channel that why even play the precious metals game because it's rigged to begin with. So to unpack that, I have none other than Mario Ineko. Great to have you back on the show.
Oh, thank you. And you're welcome. And thank you for having me.
Yeah, it's been a while since I had you on the channel. Last time we discussed precious metals and central banks, and this time I want to talk about manipulation of the precious metals markets. And I would like to start by having you set the stage. Explain the different gold and silver exchanges and their roles for us, because it's all very confusing, especially for somebody who's new to the space. You've got the LBMA, the LME, the COMEX, the Shanghai Gold Exchange. So as much as you can possibly simplify it, what do they have in common? What are their differences, and what is their role in the precious metals markets?
Okay, I'll start with the LBMA because I think it's the oldest, really. It's the London Bullion Market Association. It isn't an exchange per se. It's an association of all the people involved in the foreign exchange market for gold and silver. Most people don't realize that gold and silver are traded as foreign exchange and has been for over 100 years in the city of London. So that's the LBMA. They trade over the counter and they trade mainly through the bullion banks. The other one, of course, is the COMEX, which is the Commodities Exchange. Used to be part of the NYMEX, but now it's part of the CME. There's a lot of consolidation, the futures exchange in the US. The silver futures has been around, I think, since the 30s. So it's been there for a long time. The gold futures on COMEX, yes, and on COMEX they only trade futures and options. On LBMA they trade what you call the cash or forwards. Forwards are like a future, but anyway, the gold future on COMEX or GC kicked off on December 31st, 1974. Because on January 1st, gold was made legal again after Roosevelt banned gold ownership in 1933. And of course, the silver futures is SI. It's a contract for, to buy in the future or sell in the future and take delivery or having to deliver. And then the Shanghai Futures Exchange is just, an exchange that was created in Shanghai to trade not just gold and silver, but other commodities as well. They're not linked to the COMEX. And the last one there, LME. Well, the LME is really not a gold and silver exchange. It's more of a base metal or industrial metal exchange. They did have a gold and silver contract a few years ago, but that didn't kick off. Yes, it's the London Metals Exchange, and it's all traded. A lot of it is traded over the counter, even though I think they still have a trading floor. And lately, of course, there's been news that the LME would join with the Shanghai futures. And a lot of people don't know the LME is owned by the Hong Kong Futures Exchange. And I think what's going to happen there is that people on the LME will be able to transact indirectly, through the LME on the Shanghai Futures Exchange. I don't think the LME is going to become it could become a big gold and silver exchange, but that would mean that China would be, picking up in terms of the importance. So those are the main gold and silver exchanges. And for us retail investors, we buy gold and silver off the precious metal dealers or the local coin shops, and they base a lot of their prices on, especially here in the UK, off the LBMA AM fixing and PM fixing for gold. And I think in silver, there's only one fixing. It's at midday. So that's what they base it off.
With rising inflation, bank failures, and massive layoffs across multiple sectors, the future of the economy remains uncertain. It's no wonder the central banks have been getting prepared by stockpiling gold. At ITM Trading, we have spent over 27 years building a team of seasoned researchers and analysts who can help you prepare for any financial crisis. Our experts are ready to provide you with proven strategies to safeguard your wealth and assets in the event of an economic downturn or currency reset, which is frankly inevitable. Don't wait until it's too late. Schedule your free gold and silver strategy call by clicking on the link in the description below.
Very interesting. Thank you for painting that picture for us. And I do want to get to the Shanghai Exchange and the LME, the scenario that you were just describing a little bit later. But first, I'd just like to hear what you think about potential manipulation of the gold and silver markets. I mean, obviously, we've seen things happen like JP Morgan traders get convicted of manipulating, or they call it spoofing, the market. And depending on who you talk to, some people think the conspiracy goes very deep. I'm wondering what your view is on how manipulated the gold and silver markets are. What is the mechanism by which they are manipulated, if you believe they are? And how much are the different exchanges that we just described, the COMEX, et cetera, involved in manipulation?
First of all, I just wanted to tell people that I noticed some interesting patterns in the price of gold and silver. And by that, I mean the same thing used to happen every day at the same time, which is very unusual. Markets are more random. And that was back in 2002 when I started buying gold. I bought some Krugerrands, but I worked in the futures market, not doing gold and silver, but trading government bond futures. But I started following gold, and I noticed that, and I saw right away that it was manipulated. But I don't think, in my opinion, there's any speculation that it isn't. And you can go back almost 100 years, and there's something called in the UK it's Her Majesty's or His Majesty's now exchange equalization accounts. And you can find that on the government website. And it says here, I'm reading, the EEA was established in 1932 to provide a fund which could be used for checking undue fluctuations in the exchange value of sterling. Subsequent legislation has extended the possible use of this fund. And it says here as well, under this government website, that the fund holds gold and other foreign exchange assets. So, as I said earlier, when I started out in the business in the early 90s in Switzerland, I worked for a small private bank. And the first thing I noticed is that on the Reuters page called FX at the time, where the dealer for that small firm dealt in foreign exchange, I noticed a little thing at the bottom, XAU and XAG with prices. And I asked him, what is this? And he said, well, that's gold and silver. It's traded on the foreign exchange. So that was why 1932? Why did the UK create that equalization account? Well, because in 1931, the UK left the gold standard. And I'm sure they knew that the value of sterling would be attacked by speculators and investors and traders. So that's why they developed that exchange stabilization or equalization account, And then a year later, the U.S. Treasury created the Exchange Stabilization Fund. And that was also when the U.S. left the gold standard domestically. And it says here the U.S. Exchange Stabilization Fund was established at the U.S. Treasury Department by provision of the Gold Reserve Act of 1934. So even, the act from which it was created is called the Gold Reserve Act. It says it was intended as a response to Britain's exchange equalization account. The fund began operating in April 34 under Director Archie Lockheed and financed by $2 billion of the $2.8 billion gold surplus the government had realized by devaluing the dollar. Not only devaluing the dollar from $20.67 to 35, but also confiscating all that gold from the American public. So they were using this fund to basically control the value of the currency, just like the British. So that's where it started, in my opinion. And how do they, what was the other question? How they do it?
Yeah, how they do it and how much the aforementioned exchanges are involved in the manipulation.
Well, I think the COMEX and the LBMA, they're not the same organization, but the banks and the financial institutions that operate in both of those, they use both of those. So they scratch each other's back. The futures market is simple. You only have to put about 5 to 10% down of the value of the contract. And it creates volatility because people are leveraged. And the same thing goes for the LBMA. There's a lot of forwards trading, which is also leverage. Forwards are just another name for a future, but on a over-the-counter market. Yeah, and that's how they do it. It's just like the foreign exchange market. There's a lot of leverage, and they sell gold and buy gold that doesn't exist. Hardly do they take delivery of gold and silver on these exchanges, especially COMEX. LBMA, probably not as much either, but they do sometimes because a lot of the producers and the consumers, like jewelers and refiners, they do need the gold. The other thing I would point out too that shows how they use especially the gold futures exchange on COMEX to manipulate the market is a WikiLeaks document pertaining to correspondence between the U.S. Treasury Department and also like private bullion dealers in London. And you can find that on WikiLeaks. And there's a section here which I highlighted, which I'm reading. It says, and this is talking about the bullion dealers in London who were in contact with the Treasury because they're trying to ascertain that whether once the U.S. made gold legal again in 1975, whether the American public would load up on physical gold, and that would be a problem for them. But this is what the WikiLeaks document says, and I'm quoting here: to the dealers' expectations will be the formation of a sizable gold futures market. Each of the dealers expressed the belief that the futures market would be of significant proportion and physical trading would be minuscule by comparison. Also expressed was the expectation that large volume futures dealing would create a highly volatile market. In turn, the volatile price movements would diminish the initial demand for physical holding and most likely negate long-term hoarding by U.S. citizens. So, I mean, that's very clear to me that the futures market was created to discourage the public from holding physical gold. And you said at the beginning of the interview, why hold gold if they manipulate it? Well, I think, first of all, you need to be very patient because eventually they have to let gold go because it's a way to reliquify their ever-growing fiat currency Ponzi. And second, yes, they're going to try to keep you out of gold by making it volatile. I mean, I've spoken to many acquaintances and people I meet over the years. They've asked me, should I buy gold? And I always say yes. But they say, well, but it's too volatile. It's a commodity. But that's the way they make it. And the mainstream media treats gold as well as a commodity, as volatile. You hardly ever listen to people talk about gold and silver as currencies traded on the foreign exchange market. So hopefully that's helped the viewers understand why they manipulate it and how they do it.
Yeah, absolutely. I actually didn't know it was traded on the foreign exchange market myself, so that's really useful information. How long can this all go on for? You said that patience is required, that there's going to come a time where it has to come to an end. A lot of people have predictions on this. Obviously, it's impossible to know when. Is it possible to put enough pressure on supply that contracts actually have to stand for delivery in these scenarios? Particularly when it comes to silver, there was a lot of talk around the silver squeeze movement that retail investment demand could actually squeeze supply, and also growing industrial demand for silver in particular could also put pressure on the situation. What are your thoughts there? What will it take for this to end? And is this something that's impossible to time? Could this literally be a decade from now? What are your thoughts?
A lot of people think the regulators like the SEC or the CFTC, who regulate the futures exchanges, are there to help the retail public, but no, they're in bed with the big banks, the bullion banks, and we saw back in 1980 that if you try to take delivery of silver, which is part of the contract, it says you can take delivery. They'll change the game, and they'll stop that. And I'm talking here about the Hunt brothers, and maybe they got a bit greedy, but they started taking delivery of silver in the early 70s. So it wasn't just in 1980. As for the silver squeeze, I think that is the best way to really go after the paper game, because it's very hard to stop people, you or me or other people, from buying a little bit of physical silver every week or every month. And eventually it will make a difference. It won't be, as quick maybe as the Hunt brothers in 1980. But what about, them losing control of this scheme? Well, I think the Chinese and the Russians, the way they're buying physical gold and the way they're saying that they want to run their exchanges as a physical exchange, not a manipulative paper market, is encouraging. I mean, we've seen in the last few months that the Shanghai price for gold, the premium has been above $100 at some points. And I remember beginning of October, towards the end of September, there was over $100 premium. And then all of a sudden, the Western or LBMA COMEX price had to catch up. So there is that. I think, though, as well, even if this paper manipulation scheme doesn't end, eventually the bankers, as I said, will have to let the gold price go higher. They will be long, they will make money on that leg as well. But I don't know what could cause a force majeure, something that I don't think they would keep COMEX open or the LBMA open. I think they would shut the market. It could be anything. It could be a natural disaster somewhere. It could be start of a war. It could be a cyber pandemic, anything. But after that, the prices will be multiple or a lot higher than they are right now. But to give you an example, though, patience, I think, is required, because when I started looking at gold in 2002, I bought my first coins. They were 220 pounds an ounce, and now we're over 1,600. Yes, it's taken 20 years or so, but I think that's the other thing that gold and silver should teach you, is that they're not speculative, like Bitcoin or tech stocks. They're real money. And the best part of gold and silver is that they're money, and in the system that we're in, this fiat currency system that always inflates, the currency, it acts as an investment because it protects you. And you just have to look at the report card that in Gold We Trust, the guys in, I think, in Liechtenstein, um, gold has averaged 9% per annum since the year 2000 in all the major currencies, the dollar included. So yeah, it's not going to make you, rich overnight, but it will help you safeguard the wealth that you've been able to save. And I think even for young people, it's a good way to start to get on the savings ladder, so to speak, because I feel a lot of these pension schemes and 401k and private pensions and defined benefit pensions, they're going to be in trouble, and I think you want something a little bit outside the system.
Yeah, absolutely. Just being able to store your wealth outside the system, as you said, is another huge positive for the precious metals. Maybe you could take us back in time a little bit because you mentioned the Hunt brothers there. Could you maybe unwind how that whole scenario unfolded, what the end result was, and any findings from that piece of history that maybe could apply today for people speculating and investing in the silver space?
I think they started loading up on silver futures and taking delivery after August 15th, 1971, because Nixon took the gold, the dollar, sorry, off gold internationally, and they knew they weren't silly. I mean, their father built a great oil fortune, and that's how they had their money. They knew that inflation would come, and that they needed to protect all their income in dollars from selling oil. So they couldn't buy gold because it took until 1975 for gold to become legal again. So they got into silver, which was legal, and they took a lot of delivery, and they shipped a lot of the physical gold by plane to Switzerland. So they were doing that throughout the 70s, and then I think they got a little bit too greedy, and they got supposedly other countries involved, especially like Arab countries got involved, and they started buying silver. There are rumors that the Shah of Iran got involved, and maybe that's one of the reasons why he was deposed in 1979. It could have been orchestrated by the CIA. You never know. And then silver, I mean, was up until the mid 70s, late 70s, the high had been $7, and then all of a sudden, in the last few months of 79 and January of 1980, it spiked to 50, and they were taking a lot of deliveries. So, and the Fed was trying to save the dollar, because when silver goes up like that, it means the dollar, ultimately that the dollar is no good. So Volcker let rates go to 20%. And he actually, it was the regulators, the CFTC, the Fed, and the Treasury. They had to gang up and change the rules of the COMEX. So I think one day they came out and said that you couldn't go long anymore of COMEX silver. You could only go long to close a short position, and the market fell out of bed. And the Hunt brothers had, they had leveraged themselves because the trade was going well, and that did them in. And I mean, even Jim Sinclair, who passed away a few months ago, said that he was hired. He was asked to help with liquidating the Hunt brothers position by the Fed and the Treasury. So yeah, they changed the game. I mean, and you can see the bias at the CFTC whenever silver and gold start going up a little bit quicker. They raise margins, so that the small longs can't stay there anymore because they don't have any more money to put up. But when gold and silver get trashed, you don't see them really raising margins, because they wanted to keep the public away, keep it going down, and create the volatility as well. So that's what happened in the 80s. And yeah, and that's why I tell people, even though I did trade the futures market back in around 2005 to 2008 a little bit, uh, I tell people, yeah, you can trade the futures, but beware that you can be burnt really easily, and you got to follow it, 24/7 almost. But yeah, the best way really to defeat, uh, this game is to buy physical gold and silver. It's the only way, because as you saw from that WikiLeaks cable, that's the objective of the futures market, to keep people away from real gold and silver, to keep the temptation that, oh, you're going to make a fiat dollar profit by trading, something that is really a bet on gold and silver.
So I'm wondering how much potentially the ETFs are involved in all this. What role do they play? Specifically, the ones that track the price of silver and gold, the SLV and the GLD. Do they actually hold physical metals at all? I know that the SLV had its prospectus uh, redone. I think it was last year or the year before, in response to people calling for delivery. Maybe you could walk us through what happened there, and the role that those ETFs play, if any, in manipulation of the market.
Well, I would say they are instrumental in manipulating the market, and they're another outlet aside from the futures to keep the public from buying physical. And why do I say that? Well, because if you read the prospectus, you can only really get the physical if you have 100,000 shares in the GLD. So very few people can afford that. You can't just buy one share and take a delivery of let's say, an ounce of gold. And the other thing, unless you trust banks like JP Morgan and HSBC, then fine, uh, play the ETF. But as I read here, HSBC is the custodian of the trust, and Bank of New York Mellon is a sponsor of the trust. So you've got the banks that manipulate gold and silver, that are part of the central banking cabal running the GLD. So I don't trust that. As for the SLV, you said that they changed the prospectus. Yeah, and they can do that. And that's the problem. When you hold physical gold and silver, they those coins never change over thousands of years. So this just shows you that I don't know exactly what happened there, but it just goes to show that they can change the game. And the custodian here, the trustee of the trust, is JP Morgan. So again, if you trust JP Morgan to be a honest bank, then hold on to SLV. But I don't. So that's how I see it. And I think a lot of times they take they do have metals for these ETFs, but they transfer them around with COMEX a lot of times when they run when they run low on COMEX, and vice versa. And so there's not really enough metal, in my opinion, in either on COMEX or in these ETFs if people wanted their metal right away. So yes, I think they're linked.
So you alluded to this earlier, and you also made a video on your channel about it, discussing the Shanghai Gold Exchange linking gold to the LME in what you called a major blow to the LBMA and COMEX. So walk us through that, and why it might be a step in the right direction to free silver and gold from manipulation.
Yeah, I mean, of course, it's my opinion. It's speculative opinion. One of the reasons why I thought about that is that a lot of the big Chinese banks, like ICBC and Bank of China, they recently left the LBMA. They used to participate in the LBMA, and now you hear, a few months later, that the Shanghai Futures or Gold Exchange is linking itself to the LME. And what could be the impact of that? Well, it could mean that a lot of the gold that stays in London, through the LBMA might go to China via the LME. And why is that? Well, I mean, maybe with geopolitical tensions racking up between, not just China, but also not just Russia, but also China vis-a-vis Taiwan. Um, you know, maybe the Chinese banks left the LBMA before they were told to leave. The Chinese, they don't like to lose face, so that's maybe the kind of thing they would do. So yeah, and whether the regulators in the UK will allow gold to flow from the LME to Shanghai is another story. But if they do, yeah, I think it would be very detrimental to London, because London, still trades a lot of gold internationally. But if other countries see that China has been blocked from trading in London through the LME, then you might not see any gold, very little gold come to London. And why would they need to? And that would hamper the paper game, because the paper game is sometimes comes under threat because when people want delivery, but London always seems to have enough gold. But if this were to happen, who knows? A lot of the gold might flow out of London.
And if we were to remove and unwind all the manipulation of the precious metal sectors tomorrow, have you ever given any consideration to where true price discovery is? How much higher do you think the prices of gold and silver would be under that scenario if the futures market collapsed and the manipulation came to an end?
I don't think the dollar or any other fiat currency would be around. You wouldn't be able to get gold and silver with them. It would be like Venezuela or Argentina. So you'd have to think in terms of purchasing power. How much would an ounce of gold or silver get? Because I think what holds the dollar and the pound, the euro, and all the other fiat currencies versus gold is the COMEX and LBMA paper game. So if that were to collapse, the currencies would collapse. That's my view. So you'd think, I think you'd be able to get a lot for an ounce of gold. You might be able to get, I don't know, a fairly good car, for example, for an ounce of gold, or for an ounce of silver, you'd be able to buy, a couple of iPhones or something like that, which you can't right now. So that's how I would look at it.
And I know you've discussed a lot on your channel as well. The hyperinflation in Weimar Germany is another historical point of reference. The way that gold was able to maintain and purchasing power for people in that scenario. Could you maybe walk us through how that unfolded, and if you see a potential parallel situation we're in right now? Could something similar happen?
Yeah, back in the early 1920s, the dollar and the pound sterling, were still like as good as gold. So uh, when tourists went to Germany, to Berlin or wherever in Germany, they were really loved, because they used to pay sometimes in even gold coin or dollars, because they're as good as gold. So that's how, and it's like if you go to Buenos Aires now, or Caracas, if you have dollars still, they love that, because their currency goes down every day versus that. But now, if that were to happen to the major currencies, there wouldn't be any other currency, fiat currency, that you would be able to take except for gold and silver. Some people might argue Bitcoin, but Bitcoin is a different story, but it's very volatile, and Bitcoin hasn't really been through a hyperinflationary collapse, I would say, of a major industrial country, let alone the hyperinflationary collapse of the major reserve currencies. So I don't know what would happen to Bitcoin, but I know that gold and silver would still be accepted. I think gold did better than silver, mainly because gold is more not as bulky. Silver, you need a lot more to silver, and it's difficult to transport. But I'm sure silver did well as well in Weimar, Germany. Yeah, and the reason why it did well is because they were de facto, foreign currencies like the dollar or the pound or even the French franc, and those are the currencies to have, and and real things as well. Of course, farmers were quite ostracized during the Weimar hyperinflation because when your currency is collapsing and you grow crops and or whatever, you got eggs or or pork or meat, you don't want to exchange that for a currency that's worthless, so you hold back, and that's why the prices go up. And people think that farmers are profiteering, but they know why would they give up something of value for something that's losing value at the rate of knots. So that's how I see it. Yeah, and of course back then there wasn't as much economic control by the central banks and governments, and this time though there is more. So I'm not saying it's going to happen exactly like it did in 1923 Germany, because they could close things down and institute martial law or whatever. So, and maybe force people, to keep using the currency. But I'm sure people always find an alternative, the black market, and I'm sure gold and silver will reappear if that were to happen. And I think we are close to seeing that happen.
And when it comes to preserving one's wealth through gold and silver by owning physical, how do you differentiate between the two? Is gold more of a store of wealth and silver is more for barterability in the case of the collapse of the financial system? Is it more nuanced than that? How do you look at the two metals?
Yeah, I agree with you there. Gold is more to store, quite a bit of wealth, long-term wealth. Silver more for day-to-day transactions or not even barterability, because silver is also money, so it's for exchange. But depending on how bad things get, silver could be a very good store of wealth as well. So, but gold definitely is probably not something that you will want to spend during a hyperinflation. You want to have it if you can after the hyperinflation, and there will be a lot of opportunities. That's what I've heard from people who have experienced hyperinflation, is that you hold on to your gold as much as possible, because yeah, that's the last thing you do.
Well, Mario, thank you so much for joining us today. It's been an awesome conversation. Thank you so much for shedding light on the manipulation of the gold and silver markets. Before I do let you go, could you let us know about the Moneko64 YouTube channel, what it is you do there?
Yes, I publish a video every day, virtually every day. I do a live stream on Sunday night London time, almost every Sunday at 9 p.m. And yeah, the YouTube channel is Moneko64. As you said, I'm the home of alternative economics and contrarian views. I also interview other people regularly, but mostly it's what I think, and I talk about a topic, and then at the end of the video, I look at where the markets are, and basically that's what I do. And I'm on Twitter as well, at Moneko1964 is my handle, or X. There are a lot of impersonators there, so be careful. It's Moneko1964.
Great. Well, I'll put a link to the YouTube channel and your Twitter handle so people will not be taken in by imposters. Thank you once again, Mario, for coming on and sharing your knowledge with the audience.
You're welcome, and thanks for having me.